Another screw job for the middle-class Americans. What's up, everybody? This is Bubba's Bottom Line. Todd Bubba Horwitz with you. And what's going on, everybody? I hope everybody had a great weekend. And to all of my veterans who watch and who are around, I give you a big old salute and a thank you for your service. Obviously, I couldn't do what I do if I didn't have you as taking care of me, and I appreciate it. And I think every day should be Veterans Day, but we do celebrate it once a year. And again, I thank you and hope that you had a great day and everything's great. And to you and your families, happy Veterans Day. This is Bubba's Bottom Line, and of course, as we go back and take a look at last week's action, as we like to do, not a lot going on. Thursday, markets had an attempt at a sell-off, and we actually had the Dow down about 1% for the first time in about 150 days. But of course, here they came rushing out of the turn and running right back up, and they didn't get it all back, but they got back about 50 to 60% of it. There's a lot of things that are going on, and of course, I think the biggest story is the tax plan, which of course will be part of my commentary later. But it sucks, and that's what we'll say about it right now. But I think you knew that, or should have known that, and could have recognized that a week ago on November 2nd when the House plan came out. The Russell did not react very well, and of course, the Russell would be the one indice that would be the most affected by a tax plan. And so we've seen now over the last couple of weeks, the Russell has dropped about 3%. But the overall markets, again, they still linger near their highs. Nobody cares. There's nothing to worry about. Life is about a dream, right? Shaboom, shaboom. And of course, we continue to see markets try to tick higher. Again, I wouldn't get too excited for the short side of the market at this time of year. Seasonally, we are stronger this time of year. This is the Santa Claus rally, whatever you want to call it. Typically, from now until the end of the year, not that we're going straight up, but you can expect the markets to possibly be a little bit stronger. We're again, that's just part of the seasonality. Even back in 2008, the markets were a little stronger at this time of year. So we're not going to, go ahead and say that, this is the time. I would expect the first quarter of next year to be more of some selling and things going on. But I think there's some interesting developments going on. And of course, I think the first thing is the destruction of the US dollar. We continue to see these central banks and the Fed and the like continue to involve themselves in destroying the dollar and lessening its value. And of course, really what's happening is kind of the worldwide currencies are all losing value as they rotate back and forth between, okay, ECB, it's your turn to have the weaker dollar. Okay, US dollar, it's your turn. This currency war, this manipulation is a total crock. Just ridiculous. But of course, that's what we've allowed to happen throughout the last few years, and really getting more and more into it now as the central banks take over the equity markets in their particular countries as well. I mean, they're all invested now in equities, and where is it in their mandate that they should be invested in equities? So we've got this major destruction in the dollar, and of course, really what we've seen is with the destruction of the dollar is the more push towards the cryptocurrency world, the Bitcoin and things like that. Now, Bitcoin was up over 7,500 and now is around 6,000. But I think there's something interesting going on in this market as well. And I won't call it a total bubble yet, but I do think there's some issues here. Let's get it straight first. First, I do think that the cryptocurrency world is for real. I do think that it's going to be a very viable currency down the road. However, I think at this point in time, it's probably gotten a little bit too ahead of itself. And I think that what you're getting now is a lot of the sharp Ponzi schemes, scams are really taking hold here. There's like all these initial coin offerings, and there's something with Ethereum and the inventor of Ethereum. And again, what makes it have value? That's the one problem that I have. So we've gotten way too carried away, and I think we've seen a big explosion in these cryptocurrencies. Again, I do believe that in time it's going to be a very viable currency. But today, I think they've gotten way too ahead of themselves, and I think we're not settled on which one is going to be the lead. I think, between Monero, Dash, and Bitcoin, and Ethereum, and all these others that keep coming out, I don't know where it really ends and what's going to be real. So it's something just to pay attention to. I mean, I would assume that for now, the most recognized is Bitcoin. So I'm not as concerned. Again, I'm not saying that I would be dipping my toes in here at 6,000, okay? But I do believe that it's real, and that we on the radio show, we do have somebody who does cover it. So, but again, I think that is definitely the direction that we're heading. Is I think this is the way that we try to end the Fed, or at least restrict what the Fed can do. And that, I think, would be something that would be very interesting. But at these prices, probably a little bit bubblicious, especially when you consider how they continue to come out with these ICOs. I think the initial coin offerings are up like 42%. Well, again, I'm going to start my own as well. You know what I mean? So it becomes more of a problem. All right. And as you look at the world, all right, we've got investors that are just so complacent that they buy everything. And they chase the hot stock, the hot Bitcoin, or the hot cryptocurrency. They're chasing everything. And I think that this, again, becomes a bigger problem as we continue to see everything just kind of explode. Everybody says, well, this isn't the 90s. No, it's not. It's 2017. However, the action is very much like the 90s. When you start to see safety stocks going up 10%, when you start to see all this new stuff coming out, all these easy ways to make money, right? That's, I think, the bigger problem. It's all of these easy ways to make money, because we know that making money is not that easy. And I think that when you look at it, and you look at the markets, right, the markets continue to go up on what? All right, we've got the new tax plan potentially coming, which I doubt will ever pass, at least not anytime soon. We've got this tax to deal with on state and local government and deductions. And again, listen, I'm penalized by one of them, which is Illinois, and I don't care. I hope they stick it, okay? Because that is, the plan itself is really a plan almost against the left, because the three biggest left states are the ones that will be affected most adversely here. But again, we'll cover more of that in my commentary later. But you've got a situation developing here. We have totally thrown out the window reality. And when you have no reality, and you have everybody chasing yield and looking for opportunity, I think that becomes, again, another one of the bigger problems. Now, one of the hot ones has always been Tesla. And of course, Tesla's bonds are at all-time lows right now. So there's not a lot of enthusiasm out in that world either. So again, at some point, the markets stop going up. The music stops. You can't find a chair to sit down, right? Musical chairs. And we see a dramatic change. Now, can it be today? Well, it could be. It could be tomorrow. There's no telling on when it will be. But what we do know is it will happen. What we do know is that because of the average investor's enthusiasm, and as Al Greenspan coined it, irrational exuberance, knowing that they can never lose again and that the markets will never go down again, I think that becomes the bigger problem. And I think that when we think about it, all right, it becomes, why are we here? How did we get here? Why are we here? And is it deserved? And the answer is, we got here because we've got a Fed that printed $4.5 trillion of air, okay? We're here because the Fed, not only have they printed the money, but they have made it impossible to invest anywhere else. We've got here because people have a thirst, because of greed, because of the way that everybody thinks, because everybody believes that this time is different. And I think that is maybe the biggest story to talk about in these markets. It's never different. You realize that you've got experts that actually I used to have respect for, talking about these are different markets. You know, markets are markets. It doesn't matter. Markets are built by price discovery, right? The exchange of wealth. You have a product, I've got cash, we exchange. But we have to find and discover the right price. And the true price discovery model is not in play at the moment right now because there's too many outside interferences that are trying to manipulate this. In other words, the Fed is trying to borrow its way out of debt. That becomes a problem. And of course, the new Fed chair is also making investors extremely complacent because he's like this same old Fed chair, except he wears a suit and tie instead of a dress. But at the end of the day, he's going to be the same old dove, which is kind of what President Trump wants, because that's how you keep the money cheap. Now, I guess the real question you need to ask yourself, is cheap money the real way to go in this world? Now, my personal answer is no. It's ridiculous because it cheapens the money that you have. It cheapens what you're holding, and then it's not real. And that goes into the housing market, which isn't real right now, because what is the housing market driven on right now? We're driven right now on cheap money drives house prices higher. Money becomes more expensive, house prices fall. So they're basically just playing the money. Now, you play the money which comes off of the bonds and the spread, and of course, if we look at the bonds and the spread, and we also now see the yield curve, which is the short-term rates to long-term rates, they all go on a curve, and of course what's happening is the long-term and short-term are starting to meet. The curve is flattening, and it may actually invert, which would not be a bullish sign. All right, so I believe what we've seen here is we've got a failure to communicate, all right, and we've got a failure of the system, but it's no surprise because after all, the Federal Reserve only knows how to do one thing. They only know how to print. There are a bunch of clueless individuals that have big, heavy degrees from fancy colleges, but at the end of the day, they have no clue on what makes a business or an economy run. And that becomes the overall situation and the problem that we're going to face eventually. And if you don't think so, just look in history. Right? We've seen this happen time and time again for whatever reason, and this time is not different. This is the same old time, but this is the Bubba Show, or Bubba's Bottom Line, and this is Todd Bubba Horwitz. Of course, I want to remind you to check out my highschoolinvesting.com site. We've got a new link put up there for Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. We are trying to help raise some money because I've supported it myself for 6 years, and we've got in about 300 and some high schools, and we're trying to get to more, but we need some capital now. So any of you who would like to potentially donate to that, please check it out. And we're going to, for some of the bigger donations, we're going to do some special things for you. So appreciate that. And also, don't forget to catch the Bubba Show every single day, 2 to 3 Eastern Time at libertytalk.fm. And you may or may not be aware, but every day I do a daily update for about 4 or 5 minutes about what happened that day and what I expect to happen tomorrow. You can sign up for that for free at bubbatrading.com. Please check it out. This is Bubba's Bottom Line. We're going to step out of a break. We'll be right back with more of Bubba's Bottom Line after the break. Welcome back to Bubba's Bottom Line. Bubba here. What's going on, everybody? And again, I salute my veterans. Can't do it without you, and God bless you and thank you. And I mean, first responders and everybody, all the people that take their lives in hand with not out knowing the people that they're trying to protect. God bless you, and I thank you. So Alibaba had its Singles Day on Saturday, and it did $25 billion. All right, amazing. All right, now to get a good comparison of how much that really is last year, Black Friday and Cyber Monday combined did about $8 billion. Baba did on a non-holiday, okay, $25 billion in one day. All right, let's think about that. Now, of course, their population is huge. In fact, they say that in 10 years or whatever it is, that the middle class of China will be bigger than the entire United States of America. So we'll see how that plays out. But again, very, very interesting. And it was funny because a lot of the deals weren't that good. I don't know. I don't get it. But hey, I'm not single anymore. But so we've got Alibaba going bananas. But let's look at something. Okay, rail traffic. Now rails are used to ship a lot of goods. Rail is a cheaper, more way to ship goods from like one coast to the other. Typically what happens is you buy something, let's say it's manufactured in China, it's shipped over to either coast, and then typically most people will try to get it railed to their location, save on freight, blah, blah, blah. In the meantime, rail is weaker. Right? Why is that? If the economy is so good, why is rail weaker? It doesn't make a lot of sense, okay, when you think about it. Right? Rail should be stronger. If the economy is really stronger, then rail should be stronger. So you got me. Again, we can continue to hide from everything that's bad and pretend that it's good, but at the end of the day, it's not. And of course, this is something that, again, when it does, as I've said, I believe that the bull market is in, let's say the bottom of the ninth inning. All right. Now, if we do believe that it's coming towards the end, then I believe that the markets are looking for a reason to sell off. They just don't have that reason yet. And until they do, they will continue to grind higher. This dull market rally will continue to float and float because that's what dull markets do. Dull markets continue to float or drift higher. But, and this is not, again, telling you to sell everything or to get short the market. It's saying, be careful. It's saying, be aware. It's saying, possibly be hedged. There's many, many things that are going on in this country, and a lot of them aren't good. Right? In the meantime, you had some key earnings out last week, and interesting enough, Disney missed on earnings, but then popped. Now, I think something interesting about Disney, they're now talking about going into live streaming on their own. And my contention is that Disney is going to buy Netflix or make an attempt to buy Netflix. I know I've been a player. I've been always under the thought that Apple would be a player for Netflix as well. But I think here's my theory behind it is Disney used to provide content to Netflix and they stopped. I think that Disney wants to get into this streaming space, and I think that they do want to be a player for Disney. I mean for Netflix, and I think that might be the story over time is that you might see them make a legitimate play because we are in a streaming world, and I think that that's almost everything that you go through now because everybody wants to stream. There's a lot of reasons for it. You can do it's on-demand TV versus having to wait for the network. No commercials, and God forbid, I mean, there's a new program I've been watching, The Good Doctor. Every 6 minutes there's a commercial. I mean, you can't even get into the show. So it becomes another problem. And of course, we've got the issues that are starting to flow here that make me more concerned, and that is, A, the Time Warner cable deal is going to fall through. Sprint T-Mobile deal fell through. So when these deals, everybody likes to just forget about it and ignore the problems that happen. But at some point, they do become something that are meaningful, right? And that is, so we tie it all up, okay? We got markets dribbling higher, but the Russell is very weak. We've got Bitcoin that was selling off quite a bit. We've got the elites and the banks trying to get rid of Bitcoin because, again, it affects their direct bottom line. We've got a lot of attempts at some pretty much manipulation of what's going on. These are all warning signs. These are not like, okay, these are things that are saying to you, hey, you might want to be careful here. You may want to think about what's going on because here is exactly what's going on. Everybody continues to send out messages, right, either through their earnings or through their announcements. And the sad thing here is that the two biggest companies, or two of the biggest, Google and Facebook, I think are also now destroying the youth of America. I think this amount of time on the internet, I think that, with this now cyberbullying that somehow these guys continue to go through, I think that they create a lot more problems than they cure. And maybe it's just me that I'm old, but I'm starting to get very concerned about the overall views of how they actually threaten the public. I'm concerned about what they do to kids who can be so easily swayed or mentally manipulated through a few words on the internet. And I'm concerned at what direction we're headed at. We're raising a generation of people that cannot communicate through normal skills. And I think losing the personal touch and the amount of time these kids spend, even adults, spend on computers looking at Facebook and the like, I think is a problem. I think that is going to create a much bigger problem down the road. So I think there are issues to deal with. It has nothing to really do with their stocks at the moment. But overall, we see the markets probably strengthening throughout the year. We've got about 6 weeks left of trading, so to speak. You've got about 2.5 weeks of November and about 2.5 weeks, about 5 weeks probably of real trading, because after the Fed meeting in December 13th and 14th, I think it's all over. Okay, I think that's it for the year. Now, it doesn't mean the markets won't trade. It just means I don't think there'll be much happening. All right. So I think, again, you need to look at hedging. You need to look at ways to protect yourself. You don't need to short. You don't need to puke out and dump now. You just need to be prepared for what the inevitable will be. Because I think the first part of the inevitable will be a dip down and then a rally back. And where that rally might fail would be really more what we're looking for. But this is Bubba's Bottom Line, and I am Todd Bubba Horwitz. And of course, I want to remind you about Patreon, patreon.com, patreon.com/Bubba Trading. Help me out. We want to get these high school students going, because I don't want these same problems 30 years from now. I won't be here, but I want to do my part now. And I need capital. I've handled it for 6 years with 300 high schools out of my own. And now I need to get some help if I'm going to be able to continue. Otherwise, I'm going to have to close it down. In the meantime, don't forget to get the Bubba Show every single day, 2 to 3 Eastern Time at libertytalk.fm. And last but not least, don't forget Bubba's daily updates that are free to you. All you have to do is go to bubbatrade.com, and there's a box that pops up. You can fill it out every day. After the close, I send you an update telling you what I saw and what I'm looking for tomorrow. This is Bubba's Bottom Line. We'll be right back with my commentary after the break. Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, every week I get to bitch. Well, I get to bitch all the time. But this is my commentary. And the first thing is I open this show with the tax plan sucks. And I'm pretty disappointed at the mess and the garbage that we're looking at. I will start with, the business tax. Why should a big corporation only pay 20% when a small corporation should pay 25%? Where is the fair and equal competitive balance that allows a big company that already pays less on everything else to also pay less on taxes? I think that is, to me, that's what made the Russell react adversely. Because why is it that a big, let's use banks because that's what I can talk about, where a big bank, a JP Morgan, can pay less tax than your local neighborhood community bank. All right, the community bank already gets screwed on regulatory issues because they have to pay more because they've got a smaller staff. They get screwed on every step of the way, where the big banks just kind of wash it off. So now we get one more screw job, of they get to pay 5% less taxes. Shouldn't it be that the small business gets the 20% so that they can hire? What we seem to forget on a regular basis is that small business, middle-class America drives the economy. All right? Without them, you got nothing. So now you want to take more away from them in comparison to their competition to make them less competitive in the overall business, which what does that do? You let the big guys grow. Don't they always fight about these big monopolies, but yet they want to destroy the smaller business and make them non-competitive? Small business does the hiring, they do the working, they pay the best benefits, they pay the best salaries. They were the keys to making America great again, Mr. President Trump. And when are we going to get away from every single program that is only meant to take advantage of the middle class? I don't think that it's a good plan. I think it's a ridiculous plan. And I cannot believe that all of the pundits are out there kissing tush, all right, on how good this plan is. I don't see it. I see that those that are in the high tax states, they're going to lose that deduction. Some of the mortgage deductions we're going to lose. And furthermore, where is this going to create any growth? All right, where is this repatriation of funds that's supposed to going to come back going to help? You don't think that these companies are just going to buy back their own stock? Do you actually think that they're going to put that money back in? They're already having record earnings and have spent not dime one on CapEx spending. So what makes you think that if they get this money back that they're going to actually put it into their businesses? They're going to buy their stocks back because at the end of the day, it comes down to money. All right, that's the end of the day. And quite frankly, I'm sick of it. Again, I've heard these stories time and time and time again, and it becomes to a point where it's just a joke. And there's no reason to believe that anything is going to get better. Now, you've got the House and the Senate both put out two crap plans, all right, that don't, a postcard, I'll need 1,000 postcards the way that they're talking about these taxes. I don't understand where they're getting it. And then we went to, I believe, 7 or 8 categories of tax. Are you kidding me? I mean, again, what happened to just a plain old flat tax? What happened to just a plain old simple flat tax? That's what I want to know. Paul Ryan, Mitch McConnell, you guys, again, you're out there chortling, smiling, and laughing as I have to sew up my pants pocket because I know you're going to put your hands down there. And to me, it's become a total joke of what they expect us to believe. Because certainly it's hard to believe anything that they say, because not one bill have I seen that has actually benefit the overall middle class. I've seen continued passage of things that take away from the middle class, as will this tax plan. They did not address the debt. They're going to add to the debt, and they are not going to get the growth. That's the biggest bunch of crap. And Steve Forbes and all you other guys that are chirping about how good these plans are going to be, that's because you're billionaires and you don't give a crap about the little guy. All right. So I'm tired of hearing about how good this plan is. This plan is no good for anybody. All it does is add more money in debt. It does not address the $20 trillion that we're in debt now. It doesn't address the $4.5 trillion that the Fed pissed away. All it does is allow the Republicans to get a possible win and push higher. And I voted for Trump and I still support him, right? But I'm getting a little bit tired of the way all these things are working out, and we have not seen the overall changes that we're looking for. All right? And that's where I'm getting upset. This is where they came out and we worked so hard to get this tax plan together. What takes so long? That's what I want to know. All right. Where is true fiscal responsibility, which is not taken apart in this plan? They've ruined, there's so many things that are going to be destructed based on this plan that it's hard to fathom that everybody's trying to make it like it's such an exciting plan. I don't get it, but what I do get is this is Bubba's Bottom Line, and it's always great to have you here. I appreciate you spending some time with me. This is Todd Bubba Horwitz, Bubba's Bottom Line. We'll see you back here next time on Bubba's Bottom Line. Have a great day, everybody. Thank you so much. We'll see you next week. Bubba's Bottom Line.